Hello and welcome to Ticker Tapes. Today, we're taking a look at the world of high-growth stocks. Earnings season has largely been kind to high-growth stocks. Sector specialist Wedbush wrote that June earnings season was a major victory parade for the tech bulls as enterprise spending, cloud-driven budgets, consumer products and e-commerce demand, and even digital advertising was much better than feared. Some of the gloss came off that rally last week, however, as NASDAQ 100 slipped by 2.4%, and we also saw a sharp reversal in the number of stocks in the index that are trading above their 5-day moving average. The indicator fell from a reading of 96% on August 15th to just 8.82% by Friday's closing bell. Do those changes mean that the rally in growth stocks is over? Not necessarily, because there are still plenty of growth and technology names yet to report, with stocks like Autodesk, Salesforce, Snowflake, and DELL Technologies all due to deliver earnings reports over the next week. Earnings are just one piece of the jigsaw, however. Another very important factor is the macroeconomic background and, in particular, the future path of U.S. interest rates. The central bankers that set interest rates will gather in the picturesque resort of Jackson Hole, Wyoming this week for their annual symposium with panels, discussion groups, and speeches, including one from Fed Chair Jerome Powell on Friday. Investors will be looking for any hint from Mr. Powell that the pace of interest rate rises will moderate and that he and his colleagues on the FOMC will now adjust borrowing costs by increments of 0.5% or lower going forward. If they get that assurance, it's likely that investor sentiment will move to being risk-on once more, and high-growth stocks tend to do well in that environment. If investors don't feel reassured after Chair Powell's speech, then we could be in for a tricky time, and it could be particularly tricky for growth stocks that enjoyed a decent run-up over the last 6 weeks. For example, Latin American e-commerce group Mercado Libre rallied by as much as 55% in recent weeks, but it lost almost 16% in the last 5 days as traders preferred to lock in some profits rather than continue to hold on to highly rated stocks. Other significant casualties included drug maker Moderna, which fell by 14.65% last week, DocuSign, which fell by 11.33%, and EV maker Lucid Group, which lost just over 10% in the last 5 days. Despite those losses, there are some good omens for growth stocks. Recent data from Bank of America showed that institutional investors are revisiting growth stocks, which enjoyed their biggest weekly inflow of new cash since December 2021, with more than $2.5 billion being invested last week. Whilst Reuters reports that in a poll of 94 economists, 76 believe that the Fed will now move rates by no more than 0.5% at its September meeting.